Hi and welcome to Inderes TV. It is earnings season and Wärtsilä released its fourth quarter results today. I'm here with the company CEO Håkan Agnevall. We're going to go through Wärtsilä's performance and other relevant topics. So nice to meet you, Håkan.
Nice to meet you again.
Good result. Congratulations for that.
Thank you.
The full year result was strong and even the last quarter also. What were the key highlights?
I would say 2024, it's been a year of all-time highs. So if we look on order intake, now first time we surpassed 8 billion euro in order intake. But not only that, I mean, if we look at sales, if we look at absolute operating income, if we look at cash flow, I mean, staggering cash flow, 1.2 billion euro for the full year. So a lot of all-time highs for the full year. If you look at the fourth quarter, it's almost the same. Very good order intake, sales good, profitability coming up, and we are getting closer and closer to our 12% EBIT target. You can clearly see that, and service is contributing in a very positive way in Q4. That was a really strong contribution in the fourth quarter. So overall, I think if you reflect a little bit, in 2021 we kind of crafted the Wärtsilä way strategy, shaping decarbonization of energy and marine, and I think we really see it playing out. It's playing out from our customer interaction, how they see how we can help and support them, our customers, in the decarbonization journey, which is a journey that will take decades. That's one thing, but also Wärtsilä way playing out in our journey of improved and increased profitability.
Yeah.
So I think it's very exciting to see the strategy is playing out, it's working, and it's bringing us, and there is more to come also going forward.
Yes, your strategy is about decarbonization and of course financial performance. So there are two themes: transformation and performance. How did the year 2024? How would you assess your performance on these aspects?
So if we look on the transformation piece, it is a lot about bringing out new technologies, innovation and technologies, innovation and services. And if we look on the technology side, our first ammonia engines, first concepts for 100% hydrogen power plants. So we are really a technology leader in our industries, and we are pushing the frontier. The first pilot for carbon capture. This year we're going to have the more commercial release for carbon capture. So we continue there. On the services side, it is this concept we have moving up the service value ladder with its 4 steps. You have the spare parts, service hours, agreements, retrofits, and performance-based. And we do see it's playing out. Customers are moving up the ladder, and there are new customers entering on the lowest step. So in the transformational side, continued good development. If we look on the performance side, we also see continued good development. Services is a major driver of our profitability, but also with the changes that we have made, centralizing our manufacturing footprint to Vaasa, that has now been concluded. STH is a very strong setup. The efforts we have made to improve overall efficiency in many areas in Wärtsilä, our work with continuous improvement, which we really are putting focus on going forward. I think we see it all playing out and contributing. So I'm very happy with both of this. We are on our way.
One of your financial targets is 12% operating margin. It's quite near. So are you expecting to reach that this year?
Well, we don't. That's the thing. We haven't said it. This being specific on the time frame. We said over a couple of years. We keep it like that, but we are in the right direction clearly.
Yes. Energy. There has been the shift in balance between equipment business and turnkey projects. How has this impacted your profitability and, on the other side, risks?
Yeah, so clearly, if we go a couple of years back, 5-6 years back, we had quite a lot of challenges in some of the big energy projects, and those were EPC projects.
Yes.
So I think the big shift has been to focus more on equipment. I would say today, if you look on 2024 sales, I would say 80% was equipment related, 20% EPC. We will still use EPC, but in markets and with customer that we are comfortable and have experience and knowledge to do EPC for. So the risk profile of our project portfolio is significantly less today than some years back. So there is less risk. I think we see we have stronger execution, better predictability. Also cash flow. Ian talked a lot about, the 1.2 billion, where is it coming from? And there are a number of drivers, but I would say one of the important drivers is the shift from EPC to EQ, because EPC as a business ties up more capital.
So the cash flow was excellent level.
Yeah.
Yes. The growth in service business, you already mentioned this, but it has been strong for a long time. So what are the main drivers behind this?
No, I think we talk about, we have 4 disciplines, if you want, in our service business. I mean, you have the spare parts, the field service hours, retrofit projects, performance-based, and now we introduced a new visualization. I don't know if you recognized it, but basically we kind of visualize the book-to-bill for all of those 4 streams, marine, energy. And the interesting thing there is you see over time, we continue to run with book-to-bill above 1 for each of the 4 disciplines, both in marine and in energy. So those are the drive. I mean, we are growing in all the disciplines, positive. I mean, book-to-bill over 1, and it's. I would say we have a very strong service focus in Wärtsilä these days.
Then to the hot topic, Trump. Trump has returned as president. How do you assess the potential impact of tariffs, if there will be tariffs?
So I mean, when we look at it, on the marine side, we see limited potential impact because most of the shipbuilding industry is outside of the U.S. Also, the service business is also a lot outside of the U.S. So, but when we look at energy, there could be some potential impact because we are exporting engines from Vaasa to the U.S. But it's very hard to assess where this situation will take. I think we all see it's a very dynamic situation. I mean, almost day-to-day development is very hard to foresee what will happen.
What kind of share U.S. has in your net sales?
So as an overall market, it's one of our biggest markets. I don't think we go public on the shares, but it's one of our biggest markets, and certainly it's a very important market for energy. This is one of the market where, for instance, balancing is growing the fastest.
U.S. plans to order like 40 ice breakers. Do you see any potential business to Wärtsilä?
Absolutely. I mean, I wouldn't, factor it in for next quarter, to put it like that. I think this is an industrial logic that will evolve over time. But I mean, it's a matter of fact that the world-leading industry competence for building icebreaker as a vessel is clearly in Finland. I mean, a very large share of the world's icebreakers have actually been produced in Finland, and we're also aware of the Ice Pact that was kind of signed. So there is some strong logic for the US as they want to ramp up icebreakers to engage with the kind of Finnish marine ecosystem, and we are part of that ecosystem and providing engines for icebreakers. That's something that we would really much look forward to. But let's see. I think that there is a core there that's very interesting, but it will take a lot of time to evolve.
Yes, let's see what happens. 2 final questions. First one to capital allocations. What are the key general principles that is guiding your capital allocations? Bolt-on acquisitions, dividend, and so forth.
Yes. So first of all, if we look at our dividend target, I mean, the target is to give out more than half, at least half or more than half of our earnings. And I think that's the kind of pathway we have followed for this year. So 44 cents per share. Then when we look at the rest, I mean, we are allocating good capital, 4+% to R&D, and then that's a step up from 3%, so now 4.6 from this year. So there we are certainly fueling capital. We are continue to invest also in plants and equipment, etc. We have a investment pace. We depreciate, but we invest at the same pace approximately. And then to your point, I mean, we do have the firepower for larger acquisitions. We have a strong balance sheet. It's getting stronger. But so far we have focused more on organic growth and then bolt-on acquisition, acquiring specific technologies. And I think this is still the thinking going forward. Yes, there might be some big opportunities coming up. I mean, the MAN two-stroke business is always up there. Let's see whatever happens. We would certainly look at it. But I think our focus is really much more on organic growth these days.
Storage, strategic review. Are we going to see any decisions this year?
Well, let's see. I think this year, I think we should definitely see something. The narrative is still the same. We acquired Greensmith in 2017. We grown the business in a good way. We got it to €1 billion top line, profitable, and there are ample growth opportunities. But it also has lower profitability than the rest of the group. So the review is really looking at what is the best way to create. Then we support our customers obviously, but also to create shareholder value. And that could mean, from continuing like today, owning the business, but also divesting or partially divesting. So these avenues are still open, and we are, of course, have had dialogues and having dialogues with external parties. We haven't made a decision. Once we have made a decision, of course, we will communicate it, but we are not there yet.
Final topic, outlook. What are your outlook in the coming or this year and key assumptions behind that?
So on our guidance for demand, we are optimistic. So we guide for a better demand situation looking 12 months ahead, both in marine and energy. But we also add, the comment that, considering the current geopolitical and tariff, uncertainties, it is more challenging than normal to do this type of guidance. But underlying, we still guide for better. And the drivers are the same, and like we talked about already in marine. It is the growth of our core segments. It is the decarbonization journey. It's growing services. On the energy side, it's the balancing power services. So it's pretty much the same narrative. It's consistency.
Thank you, Håkan, for your time.
Thank you. Thanks a lot.